Hey friends, welcome back to my YouTube channel. I am mr.lamchaneygurung, and in today's video we are going to talk about Senseonics Holdings, ticker symbol SENS, which is a medical technology company similar to that of the company that I talked about in my previous video, Atosa Therapeutics. Well, until a few weeks ago, it was in the same price range. Plus, just like Atosa Therapeutics, it will also be included today as of Russell 3000 starting today. But unfortunately, the price of Senseonics didn't go up just like Atosa. It did go a little bit, but it didn't follow Atosa's price trend. Well, I got in at around $2 range, but I didn't invest on the Russell 3000 inclusion news alone. So like most of my investment, I do them through long-term perspective, and like I always say, always think before you sink. Now technically there isn't much in this graph except for the fact that it is clearly struggling to break the $5 mark on several different occasions, as you can see on the monthly chart on the screen. Well, what does interest me about this company as an investor is their product that they are making. So yes, this is a speculation play, but the market they are trying to enter is quite huge by itself. So basically, they are developing this long-term implant device that continuously monitors the glucose level. I mean, there are a lot of people who are suffering from this problem, where they have problems with their blood sugar levels, like diabetes in this world. And I think the product is something that they will need, and it is a product that can definitely help a lot of people in this world. Basically, this investment is a textbook example from Manish Powerise, where you get, where the chances of making high income through low risk is, very much possible. But then again, I'm not your financial advisor, so take it as a grain of salt. So let's start this video. So basically, its product is an implant device, like I said earlier, that regulates, and it monitors the sugar level of the patient, and it can be displayed on your smartphone as well. And it is definitely, it's very much essential for people with type 1 diabetes. And this implant currently lasts for 90 days. Okay, so there are also other products that last for 180 days by Senseonics, but the company is waiting for its approval here in the United States, whereas in Europe it's already being used. So more or less, if Europe accepts it, it's only a matter of time when American authorities, they accept it and they start using it. So there you go, that might just be good enough catalyst if this Russell 3000 is not good enough for it to break the $5 resistance anytime soon. So the news might be anytime soon around this corner. Okay, plus finally they are also working on their third version of the same device, which they are hoping will last for 365 days. Now here is the catch. Currently in the market there are a lot of other CGMs, this glucose monitoring device, continuous glucose monitoring device, and but I think out of them, Dexcom CGM, which is a G6, is the main competitor at the minute, and currently it does also last for 90 days. Now this Dexcom's product has been used in the market for quite a bit time, quite a few years, and now since this is a health related product, so it is quite unlikely, unlike technology, Dexcom current users I think will need something more than just the 180 days product that Senseonics will be offering for them to switch from Dexcom to Senseonics product. Okay, don't get me wrong, when these 180 day product will, I think it'll do even better than what it did, the 90 days model did in the previous years. I think it will be the price that will ultimately play the role of bringing Senseonics to the first place, or to win the race of this glucose monitoring system. Now let's say the 365 days implant will cost around $400. Bear in mind I am referring to the current 90-day model, which costs around $99. That's what it says, I know, for Senseonics. And that would be around $1.10 per day. So thus this is where I get my straight figures from, the $400 figure from. But I might be wrong. The price of the product might be something else completely when it comes out to the market. It's just an estimate from my side. Whatever it is, I'm just anticipating the product price of the 365 model will be much cheaper than the existing 90 days product. Plus you would only be charged once every year for implanting the device and replacing it with a new one. So there you go. It will again substantially be cheaper, doing that only once a year rather than doing it 4 times a year. Whether it's coming out of, it doesn't matter whether it's coming out from your pocket, your insurance pocket, or the NSS. Plus, if I was a patient, if I was a diabetic patient and I needed the implant device, I would definitely opt for the 1 year replacement thing. I think it's a complete no-brainer. Now, according to Allied Market Search, the global CGM market is projected to reach $8.8 billion by the year 2027, with a compound annual growth rate of 22%. So there you go. There is already a natural increment on its income revenue of 22% compounding, and that compounds every year for CGMs and companies like Senseonics itself. But this is not just it. I think Senseonics will be the top 3 in this field, and let's say they will get I think they will get 1/4 of this slice. So let's say even if they get 1/4 of this slice of the pot, I think they will have an income that will be more than their current market cap in the first year alone. So this means in the next year the chances are the company will be at worth times 2 in the next year alone. And talking about their market cap, Senseonics had a market cap of 1.6 billion, which is a small sized company to start with. Their revenue was also impacted negatively due to COVID in 2020 if you look at the year-to-year basis. However, good news is that they are finally back to the pre-COVID levels, and this was clearly seen in the last 2 quarters and previous last 2 quarters. And again, there is another bad news, and it is that their gross loss is also increasing as their sales increases. Plus their operating expense is also increasing, and with a greater number of sales, so from a fundamental point of view, they are really in a bad position right now, because normally what happens is if you sell more products, their gross profit margin should be higher, but instead it's increased. Their loss is increasing with the growing number of sales as well. Plus their operating expense is also increasing. So that's a bit of concern for us investors fundamentally. But we have hopes with their new product. They could give a nice stream of revenue in the next few years, and it is possible that we can see them finally making money. And if they lead the current glucose monitoring market, I think $20 price target is not really far from the horizon when it comes to Senseonics stock within the next year alone. With that being said, okay guys, let me know in the comment section below what do you think about this Senseonics stock. Let me know if you are investing. Like I always say, always think before you sink. Goodbye my friends.